Hi, thank you for joining us. I want to do a shout out to the Ahwatukee Foothills Chamber of Commerce, the Apache Junction Chamber of Commerce, the Carefree Cave Creek Chamber of Commerce, the Chandler Chamber of Commerce, Fountain Hills Chamber of Commerce, Gilbert Chamber of Commerce, Queen Creek Chamber of Commerce, and the Tempe Chamber of Commerce. We are all doing this in collaboration together with the Small Business Administration. We're bringing to you some SBA experts, Jim Pipper, Craig Jordan, and Yolanda Stokes. So please, I'll let you go ahead and take it away.
Thank you, Terry. I really appreciate the opportunity. And thank you to all the chambers for helping Terry coordinate and letting Terry coordinate this event. It's going to be helpful for you to have this information, and there will be even more information than what I'm going to present that we'll pass along to Terry so that you can pass it on to your constituents and your membership, because one of the most important things to keep in mind as this thing is being developed, and you're seeing it in the news, is this stuff is changing almost on an hourly basis. Not fully, but some of the guidelines are changing, some of the policies are being adjusted for simplicity's sake, and even though we have some of these programs up and running and we're starting to see closings, we're starting to see approvals on both the EIDL and the PPP loan program, we're still building the infrastructure. We're still building the network, the database, if you will, of participating lenders. With that, today, I'm going to spend a couple minutes just overviewing the programs so that you've got a basic for how these programs interact with each other, where they fit for your borrowing community, and how they access them. So Chris, next slide, please. Okay, so that particular slide that we just went through, that's just a quick summary where the link is located for you to apply for the EIDL program that Yolanda will talk about. But real quickly, the CARES Act and specifically the 4 elements that SBA is providing as a result of the CARES Act are the Paycheck Protection Program, the Economic Injury Disaster Loan, and the Small Business Debt Relief Program. And then another program that we'll talk about quickly, which is part of this, is just making the community aware, if you're not already aware, that we do have resource partners. They are working, and they can help coach you essentially through the process. And I'll talk about that towards the end. Next slide, please. So the first one we're going to talk about is the Payroll Protection Program. So what it does is it's attempting to provide cash flow assistance through federally guaranteed loans to employers who maintain their payroll during this emergency. So if you maintain your payroll, the loans can be forgiven. It has a host of attractive features, which is the forgiveness up to 8 weeks of payroll, which is based on employee retention and salary levels. And it also has 6 months of deferral with a maximum deferral of up to a year. Small businesses and other eligible entities, they're able to apply if they were harmed by COVID-19, which is just about everyone, between February 15th, 2020 and June 30th, 2020. The program is retroactive to February 15th in order to help bring workers who may have been already laid off back onto payroll. And then you can apply for the loan all the way through June 30th. Next slide, please. So the first authorization was up to $349 billion. That is already on the books and approved in forgivable loans. All the loan terms are going to be the same. You may have seen news articles or different media outlets that there are additional monies that are being considered, and I was on the phone with a legislative official yesterday who said that is true. They are voting on other authorities for other types of stimulus. And we won't be able to talk about that today because the way I've always viewed it is until it's on the books and it's able to be accessed, it's part of the legislative process. So we know that it's happening, but we don't see it as real. We can't taste it until it becomes approved. The loan amount can be forgiven as long as the proceeds are used to cover payroll cost, which is most mortgage, rent, interest, and utility costs over the 8-week period after the loan is made, and as long as the employee and those compensation levels are maintained. The payroll costs are capped at $100,000 on an annualized basis for each employee, and it's anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. The loan payments will be deferred for 6 months automatically. Next slide, please. So some of the eligibility, which this slide here is representing, has actually changed slightly since last week. But normal small business concerns, regular eligible through the Small Business Administration 7A loan program are eligible. Also, it concerns 501c3, 501c19, and a tribal business concern that is described in Section 31B2C that has fewer than 500 employees, or the applicable size standard in number of employees for their NAICS code. There's also an alternative standard, which is 15 million in net assets, 5 million in net income. If you are also below that, then you can also be considered small and eligible. Individuals who operate a sole proprietorship or are independent contractors are also eligible. Any business concern that employs not more than 500 employees per physical location of the business concern and that is assigned a NAICS code of 72, the affiliation rules are waived. And then affiliation rules are waived for any business operating as a franchise that is assigned a franchise identifier code by the administration. Next slide, please. So this is just talking about what we just talked about already, which is the nonprofits. Religious organizations are now eligible. Further guidance is available, and we'll provide you the link that describes specifically the religious organization approval that was, I believe, last week. It's on the Treasury website, and I believe it's on SBA's website. We both have kind of landing pages that we'll pass on to Terry so that she can pass out to everyone, that you can review these particular, we'll call them modifications or additions to the policy. Next slide, please. So depending upon your business's situation, the loan size is calculated different ways, but the maximum loan size is always going to be 10 million. So your max loan is essentially equal to 250% of your average monthly payroll costs during the specified time period. If your business employs seasonal workers, you can choose March 1st as your time period start date. If you are not in business between February 15th and June 30th, again, it's 250% of your average monthly payroll costs between January 1 and February 29th. If you took out an EIDL between any of this time and you want to refinance that loan into the PPP loan because it would be part of the forgivable part, you can add the outstanding loan amount to the payroll sum. Next slide, please. What do you need? You need to complete the Paycheck Protection loan application and submit it with the required documentation to an approved lender that is able to process your application. You will need payroll documentation, payroll records, information that validates the payroll computation that we just mentioned on the slide prior. Do you need to look at first at other funds? You don't have to. You don't have a credit elsewhere requirement on this particular loan program. How long does it last? We talked about that to June 30th. How many loans? Currently only one. Next slide, please. So what are you using it for? It's payroll costs that do include benefits. It can also include interest on mortgage obligations incurred before February 15th, rent before February 15th, and utilities before February 15th. Next slide, please. So some things that count as payroll costs, which are salaries, wages, commissions, or tips, those are capped at $100,000 on an annualized basis. Employee benefits, which are costs for vacation, parental, family medical leave, allowance for separation or dismissal, or payments for health insurance, and payment of any retirement benefit. State and local taxes that are assessed on compensation. For a sole proprietor or independent contractor, there are wages, commissions, income, or net earnings from self-employment. They are also capped at $100,000 on an annualized basis for each employee. Next slide, please. How much is forgiven? You could owe money when your loan is due if you use the loan amount for anything other than those payroll costs that we mentioned. So it is going to be imperative for you to document that appropriately, because for it to be forgiven, there will be a process that you will go through with your lender, and you'll need to document that you used those proceeds for specifically those items that are forgiven. You will owe money if you don't maintain your staff and payroll. Your loan forgiveness will be reduced if you decrease your full-time employee headcount. The level of payroll, your loan forgiveness can be reduced if you decrease salary and wages by more than 25% for any employee that made less than $100,000 annualized in 2019. So the idea is to keep the payroll the same, to document what you spent the money on and document it that you spent it on eligible purposes, and then it is forgivable. So in terms of rehiring, you have until June 30th to restore your full-time employment and salary levels for any changes made between February 15th and April 26th. Next slide, please. So you're going to request that through your lender. I mentioned that a little bit earlier. It's going to include documents that verify the number of full-time employees, as well as payments on any of the other eligible elements, mortgage, lease, utilities. You have to certify they're true and correct, and that you use the forgiveness amount to keep employees and make eligible payments. The lender must make a decision on the forgiveness within 60 days. The interest rate is 1%. I mentioned earlier it's the same for everyone. When do I need to start paying interest on a loan? All payments are deferred for 6 months. When is my loan due? If there's any element not forgiven, it would be due in 2 years. Can you pay your loan earlier than that? Yes, there are no prepayment penalties. No collateral is required, and you do not need to personally guarantee the loan. However, if you do use the proceeds for fraudulent purposes, there is retribution. Next slide, please. Okay, so that covers the generics of the payroll protection program. I highly recommend those of you that have, we'll call them niche models or different business models than standard business model. Maybe you use a payroll company or maybe you use something like that. And those kinds of niche items are addressed in a frequently asked questions on the Treasury website. There's a lot of additional guidance in that frequently asked questions, and that's one of the links that I'll send over, Terry, when we're done. It's very helpful to follow that because the changes that are being made on that hourly basis, as I mentioned earlier, they're really being captured on that frequently asked question document. And it is updated very quickly. As a matter of fact, there was a couple of changes yesterday afternoon that were different than yesterday morning. So that's how quickly they're updating that frequently asked questions document. So, but let's take a step back and talk about, this is more specialized, the Small Business Debt Relief Program. This is specifically about existing SBA borrowers. So it is borrowers who are engaged currently with a servicing at 7A or 504 loan. The next payments due for both existing and new borrowers are part of this, the Small Business Debt Relief Program. So there's 3 real scenarios. If you're an existing borrower and you're not on deferment, SBA is going to make 6 months of payments of principal and interest and any associated fees beginning with the next payment due, which technically, I suppose, if it were on the 1st, would have been April 1, right? It's also for existing borrowers on deferments, 6 months of payment of principal and interest and any associated fees beginning with the next payment due on the loan after the deferment period. And if you're a new borrower, it's 6 months of payments of principal and interest and any associated fees beginning with the first payment due on the loan, but only for new loans made within the first 6 months starting from the date of enactment. So from 3/27 for the next 6 months, if you're a new borrower, SBA is going to make your payments for 6 months. Now, for those of you that are asking the question, your lender is supposed to handle this for you automatically. You don't need to sign up for it. You don't need to check a box, but you are going to need to make sure that they do it and that it is executed. That is just something for you to follow through on in maybe the next week or so. I will tell you that we provided them guidance on that this was happening and that it was going to be automatic, but I haven't seen that it's been executed yet. So that's one of the things that we'll be sending to our resource partners, including the chambers, when we know more information about how that's going to be transacted. But in the CARES Act, it spells this out specifically that SBA is going to be responsible for these payments, but it doesn't say exactly when or how it's going to be executed. And for you as a borrower, or me as a borrower, on any loan somebody else is going to be making on my behalf, I want to confirm that that happens. So I'm going to want to reach out to my servicer and find out when that loan has been paid on my behalf so that I can confirm that it does, and I will do that every month that somebody else is making the payment that's not me. Next slide, please. So with this is where Yolanda presents regarding the economic injury disaster loan. And did we find Yolanda on the call?
I think we're still waiting for Yolanda to join. So Craig, I don't know if you want to jump in temporarily.
Okay, sure. I'll be happy to talk about the program. And the reason that we bring an expert in from disaster is because the disaster group is a separate department within SBA. They have autonomy, different eligibility. We don't in the district have access to any of their systems. We're a little bit familiar with what they do and how they do it. And but we'll go through the presentation and kind of get you up to speed on a couple of things. The disaster eligibility is essentially very similar to what I just talked about. It's businesses with fewer than 500 employees, some cooperatives, small tribal businesses that are fewer than 500, sole props, independent contractors, and most private nonprofits. Their requirement is that you must have been in existence on January 21st, 2020. Next slide, please. So the maximum loan amount is $2 million. It's for working capital at a rate of 3.75 for businesses, 2.75 for nonprofits, with up to a 30-year term. It is the same terms for everyone depending upon your business model. The interest rate and the term. The payments are deferred for 1 year. If the loan is up to $200,000, it is without a personal guarantee. The way I understand it, if it is larger than that, it does require a personal guarantee. Approvals are based on a credit score. There are no first-year tax returns required. Borrowers also don't have to prove that they need to get, they could get credit elsewhere. And then we'll talk about loans that are above, I believe it's 500,000. They do take us, or I'm sorry, above 25,000, but up to 500,000. They do take a general security on business assets. At least that's the last record that I received. And they don't take real estate. That was a new caveat that I heard the other day. We're more than happy to update you. That's probably something Yolanda could speak to, but I was told that they're not taking real estate if the loan is less than 500,000. They're taking a general UCC on anything between 25,000 and 500,000, but that's something that we can confirm for you. The borrower does need to allow the SBA to review its tax records. Next slide, please. So this is called the advance, or the EIDL advance. Eligible applicants for the economic injury disaster loan can receive up to $10,000. That's called the advance. There's no obligation to repay the advance. To receive it, you don't have to have an approved EIDL, but if you are able to secure a PPP loan, the $10,000 grant can be subtracted from the forgiveness amount. And why that's confusing and what that has to do with is the PPP loan is designed for you to put your people back on payroll. And it's forgivable based on you doing that and documenting it. The $10,000 grant, if that is what you use the money for, can be subtracted from that PPP loan so that you're not spending or attempting to spend the money, the $10,000, on something different than what was eligible for the PPP loan. Next slide, please. So how do you apply? There is a very simple format. It is just sba.gov disaster. It is a couple of web pages, and this is very simple to fill out. You complete it, it gives you a confirmation, a number, and then you would then be communicated to directly by disaster. To give you an idea, I have had borrowers apply in the very beginning of the disaster loan program. I want to say that took them maybe about 2 weeks to get their loan documents, and they have closed on them. But I can't say for sure that that's what everybody's experience is going to be like, but I can tell you that there are some borrowers that have closed their disaster loan in Arizona. Next slide, please. So the fourth element is resource partners. So for those of you that are dealing with borrowers who have never applied for a government loan or any loan, or just haven't done it recently, the industry is probably pretty different than the last time they may have applied for one. and they're not real sure about forms, they're not really sure about their financial statements they need to gather up, all of those things, we have resources for them to get coaching or assistance, specifically SCORE, the Small Business Development Centers, Women's Business Centers, that acronym is Veterans Business Outreach Center. We also have and list as our resource partners our micro lenders and our participating lenders. The PPP loan is provided by the lending community. Directly approved PPP lenders, all the 7A lenders are automatically approved, and there's a caveat that additional lenders are being added basically daily to provide the PPP loan as well. And we'll provide you a link with how you would identify and find them. In addition to that, you're here with some of the other resource partners, which are libraries, chambers, universities, community colleges, nonprofits, incubators, state and local government departments, and your elected officials. The reason why I made that so long is because it is important for you to stay tuned to all those different groups, because we are being fed information from a fire hose at this point. But you want to make sure that you're trying to read as much of it as you can, because A, the programs are changing slightly. B, there's new tranches of money that are being decided on as we're speaking. And then these particular groups, because they're involved with economic development, they're here to help you in some way, shape, or form. They may be aware of other programs or other elements of assistance that could really help you and your business, or you as just, a resident or a citizen, with programs that I'm not speaking about today. So the more connected you stay with these different groups and the more available you are for their resources and information, I think the better off you'll be able to adapt to our situation and to recover quicker. Next slide, please. So this is one of the links from the Treasury Department. The Treasury Department has the fact sheets. It also has that frequently asked questions. It has an overview. It has a lender summary, a borrower summary, and the application for the Paycheck Protection Program. That's on there, as well as the link to the SBA coronavirus main page. But I'll be happy to send the main Treasury page to you, Terry. But these are really good links to have handy, specifically the Treasury one, because they're updating the frequently asked questions section for, we'll call them new developments. Next slide. So this is just reiterating that disaster, the EIDL, the advance, they are one and the same. You apply for both of them at that link that I provided. For applying for the advance, really it's just clicking a button and saying that you would also like to apply for the advance. You don't need to go anywhere else. You just go directly to that web page, fill in your information, click in the box that you would like to also ask for the advance. It is really that simple. But if you need to get in touch with the disaster group, we have two channels to do that, which is the customer service number and the customer service email. Unfortunately, any other individual, specifically, for example, myself or Jim, we don't have access to their information. So we can't check the status of your loan. We can't update you on anything. We have to get information the same way you would. So these would be your two channels to check up on any disaster loan application that you have currently in process. Next slide, please. Okay, so it looks like that is the last slide. So hopefully you've learned a little bit about the mechanics of what's happening. We'll provide you with some follow-up information afterwards that can be disseminated. We have a working list of lenders that is provided by our headquarters group that will be incorporating the new lenders, probably delayed by a couple of days. In the state of Arizona, I know for a fact that we have 3 new lenders that have been approved in the last 24 hours. So that will be continuously updated. So it'll be good for you to have handy if you're looking for a lender for the Payroll Protection Program. Terry?
Great. Thank you so much, Craig. And then I have several questions that have come in through the chat box, but I also, because of the volume of people that are on the call, I want to make sure that everybody knows to please reach out to your local Chamber of Commerce and ask them your questions, and then we will, if they can't answer them, then we will get that back to our experts on your team to see if we can get some guidance to them. And then as well as if you can add the link, Craig, for the Department of Treasury that you were referring to onto this PowerPoint, we'll share this with our chamber partners as well so that they can then submit that out. So the first question is, my business is completely shut down as a non-essential business. I have been approved for a PPP loan. 8 weeks of payroll will not get me to June 30th, and I cannot pay my employees without revenue. Is it possible to use the funds for approved reasons, but not use the 75% for payroll? Will this then make this 2-year loan at 1%?
If I understood the question correctly, you have to use the loan for payroll if you want to be forgiven. So if you don't use it for the eligible costs as mentioned in the slide presentation, then it could turn into a loan at 2%. I mean, at 1%, I'm sorry. So if you follow the instructions that are provided, then it will be forgiven. If you decide to do something else with it, it would be potentially non-forgiven. The idea behind the whole program is that you bring your employees back to work and pay them as close to as much as they were making prior to this particular disaster.
Another question. We have a number of businesses that rent space, hairdressers, massage therapists, yoga instructors who don't have W-2s. Is a W-2 required for filing of PPP?
It is not required, but currently the way that it stands is if you are a business that hires contractors, that's not your payroll numbers. Those aren't your employees. You're legally separating yourself from providing them salary and benefits. So if you are a contractor, then you are an independent contractor and or similar to being what you want to call self-employed. And you provide your payroll and your own benefits. So you would be eligible to apply for PPP as an independent contractor or a sole proprietor to replace the salary that you provided for yourself and benefits.
Next question. What if you are unable to restore the full headcount due to the unemployment compensation is significantly higher than your employees' wages? So what if your headcount drops by 20%, but your payroll remains the same? All other expenses are covered under the PPP, rent, utilities, interest.
So that's a great question. It's a really good question if you really think through it. I don't have a great answer for you, but because it's not addressed, you're right. Some borrowers are going to have employees that are going to, let's call it, make more money from unemployment because of the adjustments to unemployment. And those employees may have a choice as to whether or not they would want to stay, on one or the other, or they could, exclude themselves from getting back on payroll. With that, because I don't have a perfect answer for you, that might be one we need to set aside, because I don't have policy that references what is to be done about that. I would just say that if the employee decides to stay away from payroll and the owner cannot provide that payroll for that employee, well, then they wouldn't have that use of proceeds eligible for forgiveness because they wouldn't be able to pay the employee.
So whoever that individual was, if you can reach out to your local chamber, and then we can follow up with our experts. From the time you fill your application, when do you expect the loan to be advanced and for use?
Okay, so there's two different scenarios. One is because they're two different, essentially, programs. The EIDL loan, the way I understand it, they expect you to be funded within 3 to 4 weeks from the day you submit a successful application online through that simple web portal, which so far I have seen that progressing. Arizona's only been approved for about 2 weeks, maybe. I don't remember exactly what day it was. It might have been a little over 2 weeks. So the first tranche of applicants that I'm aware of, some of them have closed their loans. So they are following that track, 3 to 4 weeks. Whereas the PPP loan program is up to the lender. They're supposed to fund them within 10 business days from approval. Since that went live last Friday, I haven't heard of any of them actually funding them, but there are literally thousands of approvals because we are still within that 10-day window. I talked to a banker today that told me they were funding one, but I don't have confirmation of that.
Okay. Next question. I am a sole proprietor with no employees. It is my understanding that the law signed into place in the CARES Act states that the emergency $10,000 advance is just that, $10,000. However, I have new information from the SBA that will only allow you to receive an advance of $1,000 per employee that you have. So if you're a sole proprietor with no employees, you will only receive $1,000. Is that true?
I haven't seen that in writing from SBA, so if you received it from SBA, from the actual administration and not a third party, I would need to see it.
Okay, then another part to that the same individual. Why would we not factor overall revenue instead? Question. Also, I applied 10 days ago and it's my understanding that we would receive the advance direct deposit within 3 days. Can we get a reasonable time of when these will start to be funded? And I think you already kind of addressed that.
I did, and I can address that somewhat because I understand the frustration behind that. So let's just try to answer it this way. The public was given that information as part of the CARES Act and as part of the framework of this particular program, whereas systems have to be built and infrastructure has to be built in order for you to execute a stated time frame. So if you're a business owner, you know, if you make, let's say you make a widget and it takes you 10 days to make a widget. And everybody knows that's how long it takes before you can ship a widget. And then they ask you to make a different type of a widget. You can't really tell them that your customers or the public that you're going to be able to provide that widget in 10 days because you haven't made it before. It's a new widget. And so that's why I think the 3-day, language was probably a little aggressive. We haven't seen it done in 3 days. I'm not saying it can't be done in 3 days, but I have no confirmation that it's happened in 3 days. And the way I understand EIDL and or the EIDL advance, the window that they're operating within is still the 3 to 4 weeks. And the PPP window that will be operated within is 10 days from the day you get an approval.
Okay, next question. Do the financials lenders have an arrangement for fees for submitting applications to SBA?
They do. That is in the interim final rule, and it is spelled out specifically. They get an origination fee for it based on the size of it.
I own 3 locations of my business. All have their own EIN, LLC, etc. Can I get a PPP and an EIDL for each location?
So far, the guidance that's in the interim final rule says 1 PPP loan per owner. Now, the EIDL loan, it's usually 1 loan per the same ownership structure. With the EIDL loan and the underwriting and all of the policy out of a different channel, I can't really comment on that. But the PPP loan in the interim final rule says 1 loan per borrower or 1 loan per owner.
Okay. So on the EIDL, how can you check the status of the application since everything is done online?
You have to call the customer service number.
Okay. For a loan application number, I've received a loan application number, but have yet to receive any emails or paperwork that it was submitted correctly. What do I do?
If you received the application number, I believe that means that you have a successful application. Now, when you apply for that, at the very end of it, before you submit, it's supposed to tell you that you have a successful submission. If you don't, and you want to inquire, you could inquire through the customer service number.
Okay. Do 1099s count as employees?
I think I addressed that already.
Yeah.
It depends. 1099s for independent contractors are independent contractors, and the way that the CARES Act part of the payroll protection is that they would apply on their own because they're providing their own payroll and their own benefits, and the PPP program is designed to cover those.
What if my employees don't want to come back? Can I replace them with someone else?
That is a good question. That's not addressed. All that's addressed is that you have valid payroll and you're going to provide it as payroll. So that's a tough one to answer, and I don't want to speculate on it. But right now, there's no policy that's keeping you from doing it. The policy is based on you providing accurate numbers to qualify for the loan amount and then applying those accurate numbers to payroll. So as long as those employees, I guess, are paid the same amount, there's no differences there than what you had originally asked for, then I don't see that the policy addresses that you cannot do that.
I only have 1099 staff and haven't paid myself. All my money goes back into the business to pay rent, lease, CAM, etc. I know how much I should have made. Do I use that number?
You are probably going to have to work with your banker on that. There is guidance in the frequently asked questions. That's a tougher underwriting question, but yes, you have to validate the amount of money that you would receive, whether you took it as payroll or you took it as, direct investment back into the company. You just have to validate it.
There's a strong chance that I will have to lay off employees after the 8-week period. Will that cause a problem with the loan forgiveness?
It doesn't, and that's a good question. That's actually a great question, because if you think about what this program does, what it essentially tries to do is get your people back to work as quickly as possible. Provide them payroll, even though you might be shut down as a non-essential business. So essentially, they're going to get paid for not being able to go to work when you think through it. And I don't think that when they wrote this policy, they were thinking that that was all going to, happen in such a wide dispersed manner. Right now, the policy is written to cover 8 weeks, and we don't know yet what's going to happen 8 weeks from now. But this particular tranche of money is for those 8 weeks immediately following the approval. So we may need to wait and see. That's why they're considering other tranches of money. But right now, because we don't know what's going to happen 8 weeks from now, your concern is valid and the question is a good question. I don't have an answer for it other than we'll have to wait and see what other types of assistance are made available through the different sources that are available.
Okay. What if the officers of the company are paid via 1099s? Will that payroll fall under the company's payroll?
That is something I also don't think is addressed. But again, I think we touched on it. So the likelihood is that they would need to apply on their own if they're contractors.
Can I use a PPP loan for May and June and then use the EIDL starting in July to avoid double dipping?
You can. So let's talk about that real quick. So the EIDL loan, the only part that is essentially forgiven is the advance, right? All the rest of the loan that you would take out is just a loan with the deferment. And so the idea is if you were going to use both, you would use the PPP to cover the 8 weeks of payroll and then the EIDL for anything else. And with the anything else, because it's a loan, you can do pretty much whatever you want with it. But the advice would be don't use it for something that's forgivable. Why would you want to do that? You'd want to make sure that you use it for something other than that, which EIDL covers expenses on long-term debt. It covers things that the Payroll Protection Act will say it covers it, but it's not forgiven. So the EIDL can be used for separate things and probably should be used for separate things that are not part of the list of forgiven items. It would make more sense for you as a borrower to apply for the PPP and try to apply all of it towards your payroll so that it's forgiven. And then the EIDL to backstop any other expenses, unforeseen expenses, as you see fit.
Okay, we bank with Wells Fargo and still have not been able to apply for the PPP loan. We filled out the form on their website and they had available, but they still have not reached out to us. Do you know if Wells Fargo has started contacting people who filled out the PPP on their website? And can we apply for a PPP loan with someone else?
In terms of Wells Fargo, I would only be speculating. I saw an article that they were starting back up. I don't know if that's the case. However, you're going to need to work with them unless you can't apply there. If you can't apply there, then yes, you can go to any other lender that will accept your application for PPP.
Okay. Another one, I was given an application number. I called the customer service and they said they could not trace the status.
The disaster customer service number?
I'm guessing that's what that means.
They could not trace the status. I really can't answer that only because I don't have access to their systems. Using logic, if they can't check your status, something may have gone wrong with the application. I would probably try to call them back before I tried to resubmit, but if it were me, I would probably try to resubmit and make sure that I got confirmation. That system is designed to walk you through each page and all of the required information. It won't let you move forward unless you provide it. So at the end, you get a green light, you get confirmation that the application was submitted successfully, and they should be able to track it. I might reach out to them again to find out if they're sure, and then if not, I would probably go into the system myself and try to reapply.
Okay. I heard that the PPP loan for sole proprietors starts April 10th. Can I fill out the application today, or do I have to wait?
You can fill out the application. I'm not aware that any bank is excluding you from starting processing or getting in line, so to speak. And I haven't seen anything other than the first iteration of the final rule where it did say that. But I haven't seen that enacted, we'll call it, in reality yet. But yes, you can definitely fill out the application and get your information ready to go, and then communicate with your lender to find out if they are waiting until the 10th to do independent contractors or sole proprietors, because I'm not aware that anybody is excluding them.
Is the time frame for interest, rent, etc. the same as payroll for the 2/15/2019 to 6/30/2009? I'm sorry, 2019.
I'm not sure what that's asking. The interest on what?
We will have that individual reach back out to us, reach out to your local chamber and clarify that information. Okay. So
yeah, but I will say, Terry, that's something that the bank will address when he applies for PPP. They'll help you with the calculation if you haven't already done it to figure out what the loan amount size should be, and then based on what the payroll evidence that you provide is.
Okay, we still have some more questions coming in. I got the green light on an application number. They just said to reapply if I didn't hear any more. They had no way to check for me on the disaster loan.
That sounds like the question, or a couple of questions ago.
Yeah. Okay.
That might be something, Terry, that we'll need to take up with Yolanda so that she can get us an answer, because it doesn't make a whole lot of sense to me that they can't track an application if it was successful.
Yep.
Or at least confirm that there is one, because it's captured on a software product that they should be able to use some method, even if it's not the application, they should be able to look it up by name or by address or by whatever demographic information that you have. So to me, that doesn't make a lot of sense. Working in a lot of lender softwares, there's usually multiple channels that you can look at a loan software to find somebody.
I have 18 employees, but only 4 full-time. Are the other 14 considered as 7 full-time?
Are they part-time? Is that what it's asking? The way that I understand it is the calculation that I provided is the one that you use for the number of employees. It doesn't matter whether they're full or part-time. You can use all of them as quote unquote full-time, or you can use an average.
Okay. On the PPP, what if your average monthly payroll is higher in the first quarter 2020 than 2019?
I believe that seasonal is addressed in the calculation that was on the previous slide. And that's all the guidance that I have on seasonal is that window, which I don't remember what dates they were, but I believe it was like January through June of 2019. But in the 3 scenarios on one of the first PPP slides, it addresses that.
Okay. Can I use the EIDL loan to pay off my current SBA backed loan since it's at a lower interest rate?
You cannot. Unfortunately, it is not for refinancing existing debt. It can be used to pay expenses, which include that debt, but it is not a tool to refinance under better terms. Your existing 7A loan, as I mentioned earlier, or 504 loan, is going to be deferred for 6 months automatically.
Okay. If I don't get the PPP loan until 5/15/20, do I still have until 6/30/20 for the 8 weeks, or will it be 7/15/20 for the 8-week period?
I don't have specific guidance on that, but I can tell you since you can apply all the way up to I think it was June, you'd be able to get the next 8 weeks through that as the forgivable amount if you apply the funds properly.
Okay. Some of these are, I think we've been through just about all the questions. Some of them have been duplicates. And I think we were able to answer them. And I think also by having this PowerPoint go out to answer some of those specific questions, people can refer back to that. Here's another one. I operate 3 LLCs that are all in the same business and the income all flows to me. Can I file for PPP and EIDL loans under one of the companies? And collective dollar figures do avoid double dipping. Then clarify it in an addendum.
I think we answered that already. The truth is you can apply for both. You're going to have to validate that the payroll, regardless of where it comes from or what it flows through to, what is the payroll, you're going to have to drill down on that. And then the lender will help validate those expenses through the documents that you provide them.
Okay. Yeah, it's like I said, I'm trying not to. Here's another one. Can you pay your part-time employees and have it forgiven?
Yes, there's no difference between full and part-time employees.
Okay. I own an hourly plus commission-based payroll, non-essential business. My payroll in the PPP loan in 2019 will be much higher than the amount paying out hourly rate for the 8-week period beginning. We will not be paying commissions until we are allowed to operate again and see clients for services. Would this be a reason not to take the PPP?
I think that's an individual choice. Right now, the calculations that are outlined are the ones that are going to be done, and those are done specifically for the forgivable part.
Okay, and then
which I'm assuming everybody would like to try to adhere to, because you can potentially leverage a higher amount, but again, that could turn into a loan if it's not used for payroll.
And then another part to that particular question, or should I take out the amount needed to cover my hourly over the 8 weeks?
I think that's a business decision.
Yeah.
If they needed to get assistance, I would recommend the resource partners, but those are choices on loan structure, which are individual in nature.
And then do you have a list of the banks that are providing the PPP loans for non-business banking customers?
We do not, and the reason that we do not is that's changing every day. We have a list that you can access, which I talked about earlier, that we will send along to you. Because it changes essentially hourly, or it can change very, very quickly. For those of you that are having issues, maybe your bank will not accept the PPP loan program or accept applications. Right now, you'll have to canvass lenders. There's no specific list of lenders that are accepting non-client or non-depository borrowers yet.
Okay, this person has 2 questions. One is a little unclear about whether the employees have to be hired by April 26th or June 30th. Because we are closed until I receive the loan, I have nothing to pay them with.
Well, that's what the PPP loan is for.
Okay. Also, the PPP asks for the EIDL amount, but there's no place to calculate what I will get.
Right. So for that, you don't have that loan in place, so you don't know what you're going to get yet. So you can let them know that you've applied for one, but since you don't have an agreement in place and you haven't closed on anything, there's nothing to put there.
We are a spa business with tipped employees. Am I supposed to pay my team for tips they normally receive, but maybe don't receive due to our business being slower?
That question, I believe, is addressed in all of the calculations, but I don't remember specifically seeing anything regarding choices on tips. It's based on payroll over that period, so that includes all compensation. And so those three calculations that were touched on earlier are those calculations. That's as far in terms of guidance as we have.
Okay. Am I supposed to pay the tips that would be just on the credit card tips or cash tips too? I have no way to know how much they get in cash tips.
Right, so that couldn't be included.
Okay. I pay myself in an owner draws not a W-2 income. Is that okay?
It is still an income. You just have to validate it.
Okay. All right. Well, I know we've had several questions, and Craig, I really appreciate your time. And I know that Jim is on the line as well if he has anything to add, but we'll go ahead and wrap this up. And I encourage you, if we have not answered your questions, reach out to your local Chamber of Commerce first, ask them for clarification, and then from there, they can also provide you with this PowerPoint that you saw today. And then as well as they can reach out to our SBA expert. So Jim, did you have anything additionally that you would want to include? He's being silent. I see him on the line. All right. Well, thank you again to Jim, Craig, and sorry Yolanda couldn't be here, but we'll get you any of those questions. Thank you so much for your time and joining us. And another shout out to my chamber colleagues for joining us today. Thank you.